All right. Well, good morning, everyone. Thomas Montgomery. We get together most weekday mornings at 8 o'clock Central to talk about strategies, tips, share techniques, and success stories. Today, we're going to have a really interesting, a very important, and I think what many of us would consider a very adult topic. We're going to talk about money, but specifically, we're going to talk about money repair. Sharing my screen here, you'll see on row three. Our 501c3 nonprofit has received a grant, and I think many of you are familiar with that. It's designed to help improve financial literacy, empower entrepreneurs, and increase access to capital. So those are really the three elements. One component of that grant requires us to do some specific financial literacy training on financial literacy, and we've labeled that as moneyrepair.org. So we own that domain. It's not live yet. So right now it is forwarded to 509 Pacific, which you see underneath the Excel spreadsheet that we'll be using for our discussion. The purpose today is to empower individuals who lack financial sophistication and or assist others that may need money repair. So what we're going to talk about is factual, it's objective. A lot of this I used to teach when I worked at the SBA. I did an intro to business curriculum whereby it was helping people determine, are they a good fit to be an entrepreneur? Because frankly, entrepreneurship, owning a small business, is not right for everyone. I think you're going to find this a very useful discussion. Won't always be comfortable, but I think it's going to be very important, and you can let me know your feedback afterwards. So first of all, I realize a lot of you are big hitters. And so when we start talking about money, people hear about credit repair, right? Well, who needs credit repair, which is not our topic today? Well, people that have bad credit. Who needs money repair? People that have bad money, in other words, that have financial issues. So I realize that this may not hit home to you, that you probably have your affairs in order, but it's a life-changing discussion for many people. And again, it's an extract out of what we taught when I worked at the SBA, SBDC. Now, when we determine, or it comes to the question, well, do I need money repair, or does someone else need money repair? The nice thing is it's very quantitative. It's very numerical, right? We can pretty quickly assess how well we're managing our money. What are some key indicators that we might look at? Well, we might look at our personal financial statement, PFS. Your personal financial statement reflects your net worth. We could look at our bank statements. Do we have money coming in? Is there money left over? Do we have an emergency fund? And of course, there's even credit reports, which are reflecting, have we done what we promised? And do we have good borrowing capacity for whatever we may need to use credit for? So today is not meant to be a personal message to any of you that are live on the Zoom, or those of you that are listening. We have 637 of you on the live, but it's more about, let's learn together this concept so we can go help other people. Because remember, that's what we're doing together. We're building financial literacy, empowering entrepreneurs, and increasing access to capital. All right, so let's start with some basic rules about money. And as I go through these, if you disagree or you have comments, feel free to type it into the Q&A. This can be as interactive as you want it to be. But we're going to first create some ground rules, some basic rules about money that may not be so common sense, because not everybody has had the same experiences in education. So basic rules of money. Number one, there is a difference between being an employee and being an entrepreneur. Being an employee means that you're typically getting paid, not always, but typically you're being paid for time worked. And so you might be salaried, you might be hourly, but there's an exchange of time for money. And that's not the end of the world. That can be limiting. Maybe you have bonuses or incentives on top of it. Entrepreneurship is much different. Entrepreneurs are not paid based upon time. They are paid based upon what? Go ahead and give me the answer in the Q&A, 639 of you. What are entrepreneurs paid based, what is their pay based upon? One word answer. Give you a moment to go ahead and type it in. So employees are normally paid for time worked. Joseph got it, for results. Entrepreneurs are paid based upon results. Results. That's exactly right, Mr. Certain. Thank you for that. So, one of the things that really differentiates people that are entrepreneurs versus employees is that willingness to accept that very fact that you're not owed anything, you're not promised anything in a larger sense. It's based upon what we go create, what we do. And we're not going to blame others. We need to take accountability ourselves. So that's number one. So is one better than the other? No, no, no. We're not promoting one or the other. But there is a different mindset. And I commonly see people that are employees in that employee mindset. A lot of times they have a hard time becoming an entrepreneur because they would rather have that direct exchange, that certainty of time for money. And in other cases, sometimes they need someone to kind of tell them what to do. They're not as self-motivated. But it's a learned skill set, so anyone can be a successful entrepreneur. But frankly, our society wants us to be an employee, not to be an employer. Let's move forward. Number two, we really need to understand what entrepreneurs do. So it doesn't matter what industry you're in. As it states here, entrepreneurs solve other people's problems by offering goods or services at a profit. Now, there's a second sentence, but we'll come back to that. Let's really study that. So, entrepreneurs solve other people's problems by offering goods or services. So, you can sell products or services or a combination of both. But if we're not out selling something, and it doesn't mean you have to be a salesperson. You could have delegated sales or sales team, whatever. But if your organization is not selling a good or a service at a profit, you don't have a business, or you won't have a business long. And a lot of people we talk to, that they're not of that mindset, like selling. I don't really want to sell anything. Well, good luck, because a business that doesn't sell a good or a service for a profit will not be around. Again, you don't personally have to do it, but someone within the organization has to. Second sentence, clients will pay the entrepreneur if they believe that their problem will be solved or at least addressed, and the value of the solution is greater than the investment. And so in some cases, I'll talk to individuals and say, well, I can't find any prospects. Well, that's different, because you definitely need a prospect for whatever you're selling. If you're selling blenders or shelf corps or whatever, you have to have a prospect first. But then we need to be able to explain the value proposition honestly and accurately, so that they see that there's more value than what they're giving up. And if you do that, you should be able to make sales. All right, moving on. Entrepreneurs, and this kind of ties back to where we started with number one. Entrepreneurs take risks. If you ever run into someone that's risk adverse, they should not be an entrepreneur, because just at the core of what we said, right? Employees are trading time for money. And I'm not saying that that's a negative, but that's the basic concept of compensation of an employee, where entrepreneurs are based upon, as Joseph said earlier, results, right? So no results means no money, but also lots of results equals lots of money, right? So we have to understand, and it needs to be calculated risk. We don't want to be careless. But if someone is not willing to be a risk taker, they either shouldn't be all in as an entrepreneur. Maybe they keep their full-time job and do entrepreneurship on the side. That's perfectly fine, and that's what we recommended at the SBA. If you have a good job, stick with the job until your side income, your side gig, your entrepreneurship replaces that income. Not everyone's in that good of a circumstance, though. Sometimes we just have to jump in, don't we? All right, so tying to these other concepts, entrepreneurs earn income. I can tell pretty quickly, and I'm not the best judge of people, but I can judge pretty quickly when people are chasing free. I want free. That's not the entrepreneur mindset, because there's someone else involved in that economic transaction. I was talking to a client yesterday and we were talking about getting a business phone number. So with the Shelf Corps, we don't provide a business phone number because that's more of a personal decision. It's an ongoing expense that we don't want to be paying for forever. So we have some recommendations, but it's whatever the client wants to use for their Shelf Corps. And they're like, well, can I get that free? No, I don't know. I don't think you're going to get a business phone number for free. Now you could do like a Google Voice or whatever, but that's not really a true legitimate business phone number. So entrepreneurs understand we have to make money, we have to earn money based upon the results we talked about earlier with Joseph, and then we don't expect free. Now, are there grants out there? There are certain grants, but if we're planning on trying to fund our business off of grants only, we're probably mistaken, probably have the wrong mindset. Again, if you have any questions, comments, concerns, type it in. Number 5, successful entrepreneurs prioritize earned income over debt. We talk to some people and they're in a difficult financial position, and we all have been there or will be there probably because life's full of ups and downs. So that's okay. But people that have the mindset, I'm going to borrow my way out of being broke, that's a very dangerous and maybe even ambitious goal, right? So normally we would have earned income, and then we'll talk about how debt can play a role effectively in business here in a minute. But entrepreneurs should really be focused on what can I do to go solve other people's problems. Up here on number 2, sell a good or a service and make money. Now, could debt play a part of our capital raise goal? Sure, because very few businesses can generate so much organic income that they can reach their potential. So that's fine. But it worries me to death when I talk to entrepreneurs and they're not focused on earned income. And that's one of the questions we'll ask. Oh, how did your bank deposits look last month for your business? Oh, 0. Is that okay with you? Can you imagine owning a business or having a business, and what you're doing is essentially having a CEO that runs the business and that business is not making any money? That's horrible. It's horrible. So we need to fix that. All right, next. In business, loans and financing, we'll kind of group those together, are referred to as leverage. And that's what I was mentioning here with the debt concept. So it's okay. Well, again, it's not my opinion. It's up to the entrepreneur because they're taking the risk, right? If you take out a loan or financing, there's a promise to repay. And so we need to be serious about that, right? We don't want to just take out loans and financing and say, well, maybe we'll pay it back. We shouldn't, it's not responsible to borrow money that we can't afford. So we need to be thoughtful when we're taking on debt. And so usually we want to predict our ROI, or return on investment. So if we go borrow $100,000 or $1 million, what are we going to do with it? How is it going to produce income, and where are we going to be able to service that debt? So if we haven't really even put together some financial projections, it's probably irresponsible to go borrow large amounts of money. Now, if it's an incidental amount, it's not that big of a deal. But we have clients that come to us, I want $1 million. Oh, okay, let's build the paperwork. It's called blank check financing. Fine, so we'll build everything around that. We'll get you the $1 million. What are you going to use it for? Oh, I don't know. Are you going to be able to pay it back? I don't know. Well, that's horrible, right? That's not good financial management. Number 7, before taking on business debt, and this kind of links to number 6, we probably should put together a business plan, a written business plan, which we provide with the Shelf Corps, by the way, for free, and financial projections. And these financial projections should be pretty detailed. They normally should be 36 months, 3 years, month by month, showing money coming in, money expected to go out. And, who knows? No one has a crystal ball. No one knows exactly what the future will hold. But if we're not putting together a plan and projections before we go take on debt, assuming it's a material amount of debt, that's probably irresponsible. I remember so many instances when I worked at the SBA. I would work with startups primarily, or pre-startups, really, people that had an idea. That was my niche at the SBA. So people would come in and they had an idea, And I can't tell you how often that once we flush through that idea, once we put together the plan and projections, they decided no more. Not because we failed them, just because they realized, uh-oh, this isn't going to be profitable enough to be worth their time. Because you could argue, and this is a little bit of a leap, if you're going to take the risk of being an entrepreneur, if it doesn't generate more income than being an employee, you might be better off to be the employee, because if the money's equal in the two different scenarios and you have no risk, the employment might be a better option. Now, of course, you don't have the upside potential. Number 8, as Art likes to say, the ocho. Uh, you can be an entrepreneur full-time or part-time, so we don't want to just group it all and say, well, entrepreneurship's not for me. Well, maybe it's better to be a side gig for you than it is full-time. Because what? Entrepreneurs are compensated based upon results, just like Joseph said, not hours worked. So sure, I know a lot of entrepreneurs that have really what you consider a side gig or a part-time gig. Could be more than full-time income, but just keep in mind that it doesn't have to be all or nothing. Number 9, sophisticated entrepreneurs will operate their business in a compliant and sophisticated way. So what are some examples of that? And this isn't an absolute rule, but we probably should have a business that we run our income through. We, of course, should be legal and compliant. So we're paying taxes. We're doing those compliance issues. Most of us that run a normal business pay ourselves a W-2 income. I know I get a paycheck every Friday, and I hope you do too. So having your business where you have employees, and maybe you're your only employee to start with, that's fine. We can set up a payroll service. So you're getting a direct deposit every Friday. Taxes are being withheld. That's a legally compliant way. And if you do it right, it actually will reduce your overall taxation, because you can still take extra money out as bonuses or loans or other ingenious ways. We should be leveraging tax deductions, right? So any of you that have a car, and if you have a business, why don't you have your car through your business? Because now it's fully tax deductible, and you can do that multiple times. You can have multiple vehicles through your business if you wish, and then just, complying with tax returns and such. So what's the point here? There's a difference between just having a hobby and being an entrepreneur. An entrepreneur should do it right, and that's really what we're here to encourage and support, is let's do it right so it's successful and so it's sustainable. And an easy way to measure that is, do you have a business? Are you running the money through the business? Are you paying yourself as a W-2 employee? Those are some easy ways to determine, are we on track or not. All right, so those were some basic rules about money. Let's move forward, and now let's talk about making money. Again, if you have any questions, comments, concerns, feel free to type it on the Q&A. All right, so being successful in making money is not really about your schooling or your education. If you read the Wall Street Journal or watch Bloomberg, some of the most successful entrepreneurs, they didn't go to college or they quit college. I'm not saying that college isn't valuable, but it's not really often about how smart you are. You could be of average intelligence and not have formal education. But what do we definitely need? We definitely need to have a profitable economic model. We need to be diligent about doing what we do, and persistence, because there's going to be ups and downs. We don't want to be quick to quit. Let's talk about the profitable economic model. So it doesn't matter how good you are, and that's a very generic term, but if the economic model that you're working under is limited, you won't be able to make a lot of money. What's an example? I have a company, a local entrepreneur that comes and details our company cars. So they charge around $80 to detail. It's not a full detail, but more than a car wash in and out. So his name's Fidel. So Fidel can be great. He can wash a lot of cars, but it takes time. So that economic model probably will never develop wealth for Fidel, because he's got to hire people, and it's a mobile car wash. He has to have the truck and the equipment. Now, maybe he could add ceramic coatings or other bigger revenue producing, but No matter how good you are or how bad you want money, if the economic model that you're using doesn't allow for significant income, it's going to throttle you. It's going to constrain your ability to generate a lot of money. Next, some people say, well, it takes money to make money. I don't agree with that. I mean, it may, but it's not a prerequisite. It just depends on the economic model you're entering into. Now, some people say, well, you should never invest. If someone asks you to pay to to get into a business, that's a scam. We're going to talk more about scams in a moment. Well, I don't know about that. I mean, if you wanted to go buy a Domino's pizza franchise, they want you to buy a franchise. Some programs have training, like to become an insurance agent. I have a friend who's my future son-in-law's brother. He's an actuary, and he's had to go through hours and hours, more than hours, but months and months and months, years of training to be an actuary. So could investing in your future be okay? Sure, I'm not trying to get you to spend money on anything, but the point is we don't want to have the excuse, and that's what I often hear, the excuse that people will make of, well, I don't have any money, so I can't make any money. That's not true. We need to find the right economic model. Like, you couldn't just decide I want to be an orthopedic surgeon and I'm broke and I don't have a medical degree. That doesn't add up. But yes, there are economic models that do not require any money. But just because something does require money doesn't mean that it's illegitimate. Okay, number three, we were talking about scam. I want to dig into scam, kind of a pet peeve word of mine. Most successful people don't say certain things because when they say it, it really diminishes their credibility. Like, have you ever talked to someone and they say, well, I'm really smart? Typically, smart people will never verbalize that to another person. Usually, the person that says, oh, I'm really smart, they're usually not very smart. Well, similarly, people that say scam, scam is really not a very useful word to use because it's not very descriptive. It's really more of a slang word. It's not really a financial or legal term. So, what we need to do probably instead is say, is something fraudulent or not? Fraudulent is a crime. And so if something is fraudulent and you know about it, we need to contact the authorities right away because it's a criminal offense, right? It could harm society. So do me a favor and don't use some of those words that diminishes your credibility. Don't use the word scam. There are 5 elements of fraud, and most of you know that. If not, you can Google it. But if something is not what it appears to be, usually, well, I'll get back to that, but let's not use the word scam. So let's go down to number 4. Written agreements that clearly specify each party's roles is not a scam. And so one would be foolish to say that you'd have to be a fool to run a scam and put it in writing because that would show intent. I mean, you'd be arrested almost immediately. So a lot of times what happens here in number 5 is people that don't know, that they're unsophisticated, often they'll label something as a scam just because they don't know. And so they don't understand the proposition, they don't have a background, they don't understand the offer, the agreement. So a 6th point is we need to understand the difference between cash and accrual accounting. If you've taken Accounting 101, you'll understand. Cash accounting is accounting for money only when it's received or paid out. Accrual accounting is based around accounting for it when it's earned or when it's obligated. More sophisticated businesses use accrual accounting. If you're a babysitter, you're using probably cash accounting. So just keep in mind those differences. Number 7, there's a threshold in the marketplace, and I know it can vary, but in general, if a business is depositing more or showing on financials at least 100,000 a month, then it's considered relevant. And once you get your business that 100,000 a month, your world will change. And I don't mean by the stuff you can buy or how people think about you, but all of a sudden your phone will ring and different people will call you. At your bank, all of a sudden high level bankers will call you because now you've become relevant, you've become important. So that's the goal, right? In my opinion, this is an opinion more than a fact. We need to get each business up where they're generating at least 100,000 a month, which of course is 1.2 million a year. That's a threshold that really determines a real business. Number 8, many people think, oh, I'm going to go from being in a tight spot to being rich overnight. That's rarely the case. Anything that promotes overnight success or overnight wealth may be, not always, but may be too good to be true. Usually there's a ramp up period. And so to think that I'm going to go from being really broke to being really rich very quickly without a ramp up period is normally not very sophisticated. Could happen, probably won't. Normally there's going to be a ramp up period. Number 9, when making money, people often don't understand the difference between active and passive income, right? So active income is, in other words, we're working the business and getting paid for it. Can't beat that. Passive income, in contrast, I don't have to put any direct time or effort. So passive income probably should be part of any economic model. If we don't have passive income, it's going to always be based upon us working. And then lastly, number 10. So our goal is to empower individuals to have a legitimate and profitable business incorporating both upfront and passive income with no investment that generates a minimum of 100,000 per month starting immediately. And I know you can't read the left of that or to the right of that. Nothing unrealistic, nothing too good to be true. So we're going to wrap up with an economic model. And again, if you have any questions, comments, concerns, feel free to type those in. So let's look at an economic model where anyone can earn 100,000 a month, no investment, no cost, no risk. So it meets the criteria we've set forth. But again, we have to solve a problem, right? Right. Any business has to solve a problem. So the problem that we're going to solve is we're going to increase access to capital so people have the money to start or grow a business. So that's what we're going to offer. The solution is going to be an express shelf corp, because if you don't have a fundable business, then you can't get business funding. What's the investment to work in this capacity? 0. So we meet that criteria. It's not a pay to play. It's not MLM, not network marketing. So now we can use some assumptions. Highlighted in yellow are the variables that we can change, and we can project how much money you would make. So right now, by default, it's 110,000 a month. And that's good, right? Because we know we want to be at least 100,000 a month to meet that threshold of really being a credible business. Well, how do we get there? Is it too good to be true? No, it's broken down by the variables, the assumptions. So first of all, as we said earlier, we're going to have to help people solve their problems or we're not going to make any money. And we're going to assume that we're doing this part-time. We're helping one person a day get an express shelf corp. So we're spending an hour or so a day. So that puts us at 20 a month because we're assuming we're not working weekends or holidays. That's a good average, 20. Could be more, of course, we can change it, but 20. Then, secondly, we need to look at the upfront income. We'll call that the upfront or the direct income, the active income. The express shelf corp, the wholesale cost, if you will, our cost to implement's $499.99. We'll call it $500. Most of you are doubling that, so you're putting $500 on top, and so then that makes the processing fee to the client $1,000, a very reasonable amount. They have no other cost for that shelf corp. That's the entire cost, no more now or later. So thus, if you're charging $1,000, you're making $500 on the front end. So that's frankly half the income or part of the income. And then we also recognize we make a performance fee off of the client's capital raise, and that's 5%. So that's passive income. So the last variable we need to figure out is, well, how much capital raise will each client receive? We know we guarantee a minimum of 100,000. We can go much higher, but let's just go with the minimum to be conservative. So with that being said, this would project out to you making a reasonable, not a get rich quick, nothing too good to be true, 110,000 a month, multiply that times 12 months and we're at 1.3 million. Now we can go in and make changes. Let's say, oh, I don't think I'll hit 20 a month, I'll hit 10 a month. So we type in 10, it recalculates. To no surprise, it's half what it was because it's a half the number. So, I mean, we're still bringing in 55,000 a month. Not as good as 100 and some thousand, but it's probably more than what most people are making now. No, I can't hit 10. I can only do one a week. Oops, not 44, 4. Okay, great. That would project out an extra 22,000 a month. That's probably about what you're making now. So you're about probably doubling your current income. So that's the point of the calculator. Now we can also go back to 20 a month, but let's say that we don't want to just help people raise 100,000. We want clients that are looking for at least 1 million, and that's very doable. Well, if we're helping them raise 1 million, that really jacks up our performance fee. And we're looking at accrual accounting. We talked about cash versus accrual. I mean, that is powerful. So what are the biggest variables determining how much money you would make as a grant coordinator? Well, how many people you're going to help, how much you're going to make up front. This is set, so that's not really variable. We could even turn that off because that's an automatic. So let's change that to not highlighted. And then the average capital raise. In closing, to become a grant coordinator doesn't cost anything. Right now, you'll go to 509 Pacific, and that is hidden right under here, 509 Pacific, and there's the grant coordinator. Our new site will be up soon, moneyrepair.org, but at this time, you'll just go to 509 Pacific, no cost, no contract, fill out this form, we'll get you set up. We'll send you an email that says it's an implementation packet. You'll be ready to start making money today. Some people are like, well, what's the lead time? How long before I can start earning income? Today. Take Drake, who's on here. Drake, I think Drake came on last Wednesday or Thursday, and I'd have to confirm with Drake. But Drake, have you enrolled like 12 people? Is that right, in your first week? If you could respond, Drake, in the chat. So we have lots of people that are enrolling 5 to 10 a day. I mean, if you want to play around with numbers, now they're doing a lot of lead generation, but let's bring this back down to 100,000. And we have a number of people that are doing 5 a day, so that's about 100 a month. I mean, that's some big boy income, big boy income. And then also we have overrides. We're not network marketing, we're not MLM, but we pay 5% out to the grant coordinator that brings the client in, and we also pay a 5% override to the team lead. So with that being, Drake just responded. He says he has 6 clients ready to onboard, and he's headed to a networking event in a couple hours. Yeah, so that's great. So some of you just get it. Some of you are wired to be an entrepreneur because of what we said. If you're going to be an entrepreneur, we've got to go solve other people's problems. You can't get around it. And to do that, you got to offer some good or service. If you're interested in being a grant coordinator, we'd love to work with you. It doesn't cost anything. At the current time, go to 509 Pacific to become one. Soon we'll have moneyrepair.org operational. Right now it's forwarded to 509. Thanks, everyone. Sorry for running long, and we will see you back tomorrow morning. And Drake said he just turned 24. He was 23 until recently. So Drake's a great guy, but he's a young guy. But what does he have? He has fucking ambition, right? He's willing to go take action. He's the definition of what an entrepreneur can be and should be. We can't be passive and be financially successful. But hopefully we've covered some valuable rules of making money, rules about money, rules about making money. We've looked at an economic model that you might want to consider. Again, no cost, no risk. Thank you so much. We'll see you back tomorrow morning. Bye-bye.